Hello and welcome to TA for Traders. It's Tuesday the 29th of August. I'm Nigel Croft. In this video we'll be looking at the charts on three UK food retailers: Sainsbury's, Tesco and William Morrison, or Morrison William, whichever way you want it. What we'll see is that last time we looked at Tesco we had a downtrend line. It's broken above there. However, with today's fall off due to the missile fired from North Korea, it's back to support. In Sainsbury's, we're at a low for the year, again down today, getting towards critical support. Not on the charts obviously, but there is a yield consideration there, as the yield is now approaching 4.4%. And finally Morrisons, which this time last week on the charts did look quite good technically, has fallen off dramatically today with the moves in the markets, again back to support. Just before I get on to looking at the videos, looking at the charts, sorry, many thanks to the people who subscribed to my YouTube channel whilst we've been away. Sorry there's been a delay for getting videos to you, but now we'll be getting regular videos to you. So anybody who's seeing this video for the first time and is not a subscriber, please do click that subscribe button. It means you get email updates when I load new videos. Okay, let's get on and look at those charts. So starting with Sainsbury's, and here we have the daily, so each candle represents one day, and you can see that we're coming down towards the 230 level, down again today. We've got negative momentum with the RSI right down at 27.92 and the MACD also showing negative momentum. The moving averages are all moving down. We did have a bearish cross back in June on the 2050 day as they moved lower, whilst they've crossed over whilst both moving lower. The only thing potentially that may be a factor here is that the low on the 21st of August and on the 25th of August was both at the same level. Just let me change the cursor. That level was at 231.8, so we could have a double bottom. Be aware of that. Keep your eye on the Sainsbury's price today. 231.8 is a critical level. If we can bounce back up towards the 240, that could indicate a double bottom, but let's wait and see. Otherwise it does look still negative. We're in this downtrend, and the next support, as you can see, doesn't come in until the lower levels of December last year. Looking at the longer term picture, here we're looking at the weekly, and you can see that we're in a trading range which goes down towards the just below 220 and up to nearly £3, and we're coming back down towards the lower boundary. We're below all the moving averages. We're just about to get the 20 crossing the 50. When they do cross, have a close look and see if that 50 was moving sideways or downwards at the time. If it's moving downwards, it would be a negative influence. On these moving averages, it's also negative that we bounced down from the downtrend in 200 day back in May. Again, on the RSI and MACD, both showing negative momentum. RSI presently at 34.89 and the MACD are down below zero. On the shorter term, looking at the 4 hour, again you can see this 231.8 level, potential double bottom, but it does look like we are going to test that. The RSI is ticking down again. Really one would have hoped for that to be ticking up, to be slightly higher than it was when it was at those low levels, to indicate a potential non-confirmation, but that's not what we're seeing. And also the MACD, which have been on this 4 hour edging slightly upwards. We're just seeing them roll, and it does look like we're going to get a sell signal from those MACD in the short term. Okay, looking at the support resistance on Sainsbury's, we've got resistance 236.89 from the 24 hour, then at 242.49 from the 20-day, with support 231.8 from the 25th of August and 224.1 from the 2nd of December. Moving on to Tesco. Last time I did a video on this, I think it was back in June, July, I drew this downtrend, and it did look negative. I've got a feeling actually it may have been back around here, and I was concerned by the downtrend and was right to be so. We did go down to new lows. We've now broken up through that downtrend and also above the 20 and 50 day, which is good. Disappointing that we came back from the 200 day, so that is the big negative influence on this market, but we've come right back down to support of the 20 day, which is at 179.84, so it'll be very interesting to see what will happen from here. It should be that we've broken the downtrend. We've had a good move up, a good rally, consolidation back to the 20 day. This should prove to be a flag, and then on the next push up, which will be in 2-3 weeks maybe, we'll then break above the 200 day, but let's wait and see. The RSI is still indicating positive momentum despite today's fall. It's at 52.65, and you can see that last week it did get up to the highs, nearly into 70s, the high 60s, which was indicative of positive momentum. MACD still showing positive momentum, but they are turning. Looking at the weekly, and here you can see the downtrend quite clearly. You can see we've broken it. We did come back last week from the rising 50 week. If we could get above that, that could give, it's moving upwards, so it will be a positive. We can get above it, it could give a further push upwards, but we've just drifted back down obviously now on this weekly to this 180 level. The 20 week is now flattening out. That will give support 177.27. In a few weeks that will start to move back upwards. RSI is in an uptrend, but it's not above 50, so not showing really positive momentum. That needs to accelerate to be more positive, and the MACD are flatlining as well. Looking at the short term, here we've got the 4-hour chart. We've pulled back to the 54-hour moving average. The 20 only gave very minimal support, so hopefully we'll find more from the 50. They're both moving up, so are a positive influence. And last week they were the factor when they created a golden cross that gave the push up from the 177 to the 188 level. So hopefully they should give support. Below there, the 200 4-hour is now moving upwards and would be a good backstop, and that's at 176.7. RSI has gone back below 50, given the extent of the down move today. So showing the upside momentum has been lost, now showing negative momentum, and likewise the MACD also showing negative momentum and has actually flashed a sell signal as the 20 comes back below, so the short term comes back below the longer term. Looking at Tesco's support resistances, resistance 1 at 182.43 from the 24-hour, then 188.74 from the 200 day, with the supports 179.85 from 20 day, 174.82 from the 50 day. Moving on to Morrisons, and here the picture did look better last week. It did look like it was going to break upwards. Perhaps there wasn't enough momentum from the RSI, you can see here, although it did start to look like it was going to break. But anyway, we've broken back down. We're now getting support from the rising 20-50 day moving averages. The 50 days 245.06. We're actually, as I speak, we are below there. If we closed at this level, it will be slightly negative, although the uptrend still is in place that you can see here. That would need a fall below this low point. Let's get the cursor on it. The low of the 21st of August. That is at 241.1. A fall below there would break the trend, and then we'd probably see the next support at the 200-day 238.41 being tested. We've lost upside momentum. The RSI is now back below 50, 43.81, and the MACD, short and longer together, looks like they're going to cross as well. On the weekly picture, we've come back to the support of the 20-week moving average. That is moving up, so should give support. You can see the uptrend that we're in, and you can see last week why it was quite exciting. Did look like we're breaking to the upside, but again on this weekly, it was the RSI that was not giving enough indication of enough momentum, which is why that there was no follow through. Again, that RSI now, it looks like it's trying to create a downtrend. You could say it actually was a non-confirmation on this weekly, the fact we didn't reach a new high on the RSI. It's at 51.83, so marginally showing positive momentum, and the MACD are rolling, so keep an eye on those as well. And finally, on the 4 hour, where you can see the extent of today's fall, quite substantial, and it's taken us down through the supports of the 20-50 and the 200 4-hour moving averages. Next support seen at this 241, just above 241. Again, you can see there is an uptrend, and we're now coming down towards the lower boundary of that uptrend, and that 241 level is critical. RSI has collapsed completely. This one actually was showing some good positive momentum, but now it's back down at 36.93, and the MACD have crossed, indicating a sell signal. Looking at the support resistances, resistance 247.74 from the 20-day, 254.4 from the high of only last week, 24th of August, with the support, this double bottom potential support 241.1. 2 days we hit that, one of them being 21st of August, and then the second support at the 50-week 235.94. So that's been TA for traders, having a look at the UK food retailers, Tesco, Sainsbury's and Morrisons. I hope you found the video of interest. Please remember, these videos are for informational, educational purposes only and are not meant as an investment recommendation. Thank you.